Hey everyone, welcome back to Corporate Decoder. Today, GNW just filed its annual report for 2025, and I am seeing some really interesting details about how they are managing retirement money. Quick note, this is not financial advice, just my take on public filings for educational purposes. The company is showing a huge increase in its retirement plan assets. But there are some subtle shifts in how that money is being managed that I want to dive into. This filing is all about the Genworth Financial Incorporated Retirement and Savings Plan, which is basically a big pot of money set aside for employees' retirement. Think of it like a company-sponsored 401k. This report, called a Form 11K, is what these plans have to file every year with the Securities and Exchange Commission, or SEC. It gives us a look at how the money is invested and how the plan is being run. Let's jump right into the numbers because that is where the story really is. Looking at the statements of net assets available for benefits, which is just a fancy way of saying the total value of all the money and investments in the retirement plan, we see a significant jump. At the end of 2025, the plan had over $1.07 billion. That is up from about $955 million at the end of 2024. This is a really strong increase of over $117 million in just 1 year, showing the plan is growing. Most of that money is tied up in investments. The total investments grew from about $937 million in 2024 to nearly $1.053 billion in 2025. That is a jump of about $116 million, which is where most of the growth came from. Within those investments, mutual funds are a big part. They've seen a good increase, going from about $62.8 million in 2024 to over $75 million in 2025. That is a healthy bump up. But the real heavy hitter here is common collective trust funds. These are basically funds pooled together for institutional investors like retirement plans. They grew from about $843.6 million in 2024 to a massive $946.5 million in 2025. That is an increase of over $100 million and makes up the largest portion of the plan's investments. This shows a clear trend of the plan leaning more heavily into these types of large, diversified funds. Something else to note is the notes receivable from participants. This is the money that employees have borrowed from their own retirement accounts. This amount also went up from about $7.8 million in 2024 to over $8.3 million in 2025. It's not a huge part of the total assets, but it does show that employees are utilizing the loan feature of the plan. Now let's look at how that money grew over the year in the statement of changes in net assets available for benefits. The plan had additions to net assets attributed to, and reductions from these assets. The total investment income, which includes the change in value of investments and dividends and interest, was almost $150 million. That's a really strong performance for the year. A big chunk of that investment income, over $143 million, came from net appreciation in the fair value of investments. This means the investments themselves grew in value. This is a really positive sign, indicating that the fund managers or the investments themselves performed well. On top of that investment growth, contributions were also significant. Total contributions from participants, employers, and rollovers added another $63 million to the plan. Participant contributions alone were over $31 million, and employer contributions were over $27 million. Of course, money also went out of the plan. The plan paid out nearly $96.5 million in benefits to participants who were retiring or making withdrawals. This is a normal part of a retirement plan's operation. When we look at the notes to financial statements, we get into the details of how they value these investments. They use fair value measurements, meaning they try to determine the current market price for these investments, not just what they originally paid for them. For level 1 investments, they use prices from active markets like stocks you can easily buy and sell. This category includes things like short-term investments, mutual funds, and the Genworth Financial Incorporated common stock. Level 2 investments are a bit trickier. These are often common or collective trust funds where they use a net asset value, or NAV, that's based on the estimated fair value of underlying assets. They are still using observable market inputs, but it's not as straightforward as a stock price. Importantly, the plan had no level 3 assets. These are the ones where the value is based on unobservable inputs, meaning they are harder to value and can carry more risk. The absence of level 3 assets suggests a conservative approach to investment valuation. Scroll common and collective trust funds. Money market funds, stable value funds, bond funds, blend funds, foreign blend funds, target maturity funds. Scroll looking at the schedule of assets. We can see the breakdown of these common and collective trust funds. The target maturity funds are the largest category, holding over $504 million worth of investments in 2025. These funds are designed to become more conservative as a target date approaches, like a retirement date. Blend funds are also substantial at over $332 million and appear to be a significant growth area for the plan. There is also a notable holding of Genworth Financial Incorporated's own common stock, valued at nearly $9 million in 2025. This is often included in these types of plans, but it does expose the retirement assets to the fortunes of the company itself. For example, we see here short-term investments Fidelity Asset Management Interest, bearing cash valued at $274,016. This is a very safe, liquid part of the portfolio. Then we have mutual funds like the Mutual Funds Capital Research and Management Company American Balanced Fund, valued at over $44 million. And in the common and collective trust funds, a major holding is the Common Collective Trust Funds BlackRock Institutional Trust Company BlackRock Equity Index, with a value of over $274 million. It's also important to note where they mention party in interest as defined by ERISA. This means certain entities involved in the plan are considered related parties, which is common in these types of filings. For example, Genworth Life and Annuity Insurance Company is involved with the Clear Course Group Variable Annuity, and Fidelity Management Trust Company is a trustee. This is generally disclosed and managed to avoid conflicts of interest. Scroll Genworth Financial Inc. Retirement and Savings Plan Date, the 18th of June 2026 in Scroll. Overall, this filing shows a retirement plan that is growing steadily with a clear shift towards large. Diversified common and collective trust funds. The strong investment income in 2025 was a major driver of that growth. While the plan holds some of the company's own stock, the majority of its assets are diversified across different investment types, which is generally a good thing for participant retirement security. The absence of level 3 assets is also a positive sign of a more conservative approach to valuation. The risk I am watching is how sustained this level of investment income will be in the coming years, given potential market volatility. What I am actually looking for is continued diversification and solid returns within those common and collective trust funds to ensure long-term participant security. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. That is my take. Stay decoded. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description.